Hello dear traders, my name is Petko Alexander from EA Forex Academy. Today is the 30th of October 2017, and in this section I will get a little bit more into details about the indicators we are using in this strategy. This section is for the people that are a little bit more curious about all of the things in trading, about the indicators, the formula behind. And of course, if you don't want to know these things in details, you can skip the section, but I would suggest you to go over it at least one time just to have an idea what are these lines, so how they are calculated, when exactly is the buy and the sell signal, what means overbought and oversold situation with the stochastics, for example, and so on and so on. So the first that I will start with is the RVI, Relative Vigor Index. That's the name of the indicator, and it was created by John Ehlers in 2002. Pretty new indicator guy, because most of the indicators were created during the mid of the last century, during the 20th century, and they're very old. I mean, you can imagine that during this time there was no internet even, or trading platforms online, and these indicators were basically created for stocks, for exchanging goods, and so on and so on. Pretty old methods. That's why if you use just these indicators, one of these indicators alone in the forex market or in the cryptocurrency market, and you will see a lot of people actually showing you so many strategies that they will say, oh, you need to buy when the stochastic is crossing, or you need to sell when the RVI is selling. And if you put it actually such a strategy on a backtester, for example in EA Studio, and put this strategy over there, you will see it's totally losing, because this is a really old method that was used, and all of these books where they will just say you need to buy here, you need to sell there, and so on and so on, and they will just go over the chart and they will show examples of profitable trades and so on. This is totally wrong. It will not lead you to any profit. I mean, you can test this by putting any strategy into EA Studio and see the results on the moment, and you will leave frustrated actually that if you use a simple indicator, it's very hard to get any profitable strategies. And once again, that's why we combine it, that's why we use different inputs even for the stochastic, for the RVI. Actually, we use the EA Studio to optimize it and to backtest it and to create this strategy, because we don't know what are the best inputs. I mean, can you imagine the time that I will spend if I change 17, 13, and 6, or if I start with 5 and then I change to 6 and 7 and 8 and I test 1 month and I see results, and obviously they will be not precise, because 1 month is very small period of time to test, and because we have these strategy builders, it's easy to find the best parameters for the asset that we are trading, and obviously for the other assets it will be totally different. That's why many people are trying to trade one and the same strategy over different assets or over different currencies. I mean, if you have an expert advisor working on Eurodollar, don't expect it to work on the other currencies as well, guys. It could, but it should be different parameters, different stop loss and take profit, and so on and so on. So I really hope that you understand me what I mean. That's why we use the strategy builder to have this strategy, to create this strategy for us, back test it on a real market data, and it showed me the best parameters to use for the indicators. Okay, so the relative vigor index, one more time, pretty new indicator from this century. It was posted in Technical Analysis of Stocks and Commodities magazine. So you see one more time, these indicators are created for stocks and commodities, most of them. So it measures the relations between price and the price range. Okay, and what's the formula behind, guys? RVI equals to the close minus the open divided by high minus the low. Okay, so each bar, each candle of our chart, it has these four values. This is what we have, guys, on MetaTrader. We have the open, the high, the low, and the close. If I put the mouse, so let me zoom a little bit, I'm somewhere over the chart, doesn't matter. As you can see, this morning the market opened with a huge gap, guys, from 5,700 and something. Let me see, what is it, from 5,750, nearly this bar closed, and then we have 6,176 reached 6,200. Really huge gap for the Bitcoin, but it's very volatile. That's why we trade it. It's very common to have these huge gaps over there. If you have bought it previously, that would be just lovely to see such a gap on Monday morning. So if I place the mouse on the close of every bar, you will see that there is this information for the open, the high, the low, and the close. And this is how the RVI is calculated, guys. Close minus the open divided by high minus the low. This is the formula for the RVI. After that, it's smoothed with EMA. So if I'm using 10 as a period, that will be EMA 10 of the RVI. So it's using a moving average to smooth it. And as you can see in the indicators list, if I go to relative vigor index, I go to edit, I'm using period of 22. And again, I say this is not just some period that I picked from somewhere. It is a very well back-tested period with EA Studio that showed me these results, that the strategy is profitable by using 22 and not 10 or any other period. Okay, and simply we have the buy signals, guys, when the green line is crossing the red line. Okay, so the RVI crosses the signal line, so you can say that the red line is the smoothed EMA of the green line, okay, of the RVI. So let's see just quickly what was the condition for our strategy. Okay, it's right over here. Let me just put it from my other screen. So the condition that we have for the RVI line is higher than the signal line. So it is not just that it's crossing, but when it's higher, we have the confirmation to go with our uptrends. So this is pretty much how it's working, guys. And let me just show you the stochastic line is higher than the signal line. So this for the stochastic, I will continue straight away with the stochastics in the next lecture. But what I just wanted to share with you is the formulas here. And one more time, don't force yourself to learn it or to calculate it. You don't need to, just because the expert advisor is doing this for you. It combines the indicators and it will open the trade for you once these entry conditions are met. Okay, I hope it's clear, and I will continue straight away with the next lecture, guys. Cheers, bye.